VFC is getting hammered right now, so hopefully not too many longs trying to bet on a comeback story there. George Tsilis is with me, our man in Salt Lake. We're going to jump to Nvidia whenever the number comes out, George, but just to kind of recap a few of these here for those that are tuning in. Our only winner right now is Snowflake among the names we were tracking here. That Snowflake report, though, seemed fairly encouraging for the cloud bulls that are hoping for some of these stocks to maybe get back to their COVID levels. They're far ways away from that, but I thought this was a good report from Snow.
Well, overall, it was a really good report. I mean, obviously the earnings beat, and of course the revenue beat was meaningful. I think, underlying, and I talked about this with Kevin and Tom during Fast Market. I think the problem with Snowflakes isn't really their business or their balance sheet or their technology. In fact, I think their technology is actually very unique in the sense that they separate, storage and computing, which is a great value proposition for those that want those two types of technology separate. I think their growth in the large customer base should improve, but I think the overwhelming problem for Snowflake is simply just valuation. We talked about how, looking at the stock relative to forward earnings, it's trading around 170 times this year's earnings and around 130 times next year's earnings. So, irrespective of the move in the after hours, which is positive, I'd be a little bit wary about this one because of the fact that valuation, irrespective, like I said, of the beat, both on top line sales and earnings, is still quite rich.
Okay. Yeah, that's the catch, right? Is that when they are still, that's the catch. Is when they're still not putting out, earnings numbers, that valuation is not going to really budge. So it still probably gets subjected to kind of market whims of risk appetite for now.
Yeah. Yeah, definitely. I mean, obviously, algos are picking up on the headlines. They're printing higher prices or bidding prices higher based upon those numbers. I think at least if they initiate some sort of structural reform in terms of, how are they going to achieve profitability quicker? I think that's really what we need to see for this particular company. I mean, I went over this company quite carefully, and irrespective of its valuation, there's really nothing else wrong with it. They're still generating over 25 to 30% sales growth. Earnings growth in terms of adjusted earnings are improving. It just comes down to, if you look across the ecosystem, I'm going to use Datadog as a proxy potential competitor. I mean, that company is generating a very low net income margin, around 5%. But if you look at the net income, this is the non-adjusted or GAAP net income margin for Snowflake. Prior to today's release, because I didn't make the calculation, but it's around negative 29%. So that's an overhang that I think is still, creating some pressure for this particular stock.
All right. George, thinking about the implications, I do think that when we get the cloud companies rallying on earnings after a period in which they were really punished and really market was taking a scalpel to these stocks, the fact that you're getting the aftermarket move in Snowflake, I think speaks to solid risk appetite. Today we talked about some of the solar stocks rallying and stuff. I mean, it's clear investors want to have a good growth trade right now. So that's a pretty good kind of backdrop for Nvidia.
Yes. Exactly. I mean, I'm not aside from what I said about Snowflake, I think you're right. And that's where this company or this stock could catch a bid, because I have noticed there's obviously some risk appetite for underperforming industry groups in the entire tech ecosystem. And that's based upon what we see in industry group or even sector rotation, but industry group rotation in particular. So, yes, I think there is some risk appetite out there. And these names which have been underperforming, which happens to be this small niche, software infrastructure industry group, which Snowflake is part of.
I'm going to cut you off there, George, because we just got
so we could see some
numbers here from Nvidia. I hear you, though. It's a great point that I think that we're seeing maybe play out live. Risk appetite for Snowflake means you're probably going to get some risk appetite for Nvidia here when they do a $6.12 adjusted earnings compared to the $5.59 right out of the gate. That's a good beat for sure. The outlook, let's go there. They're giving about a 2% range, which is pretty impressively thin. That's suggesting confidence. They say $28 billion next quarter, give or take. Street was looking for 26.8. Okay, that was the estimate. So a 2% range on their number that they're giving of 28 should be good enough. I mean, look, the market's got a good handle on Nvidia's numbers. Let's say that firstly. The analysts did a good job basically kind of pinning where they were going to be with that outlook. They're also going to do the stock split, 10 for 1. So that's likely to get a little animal spirit vibe again. Folks do always like to see, the expensive companies make it a little bit cheaper to trade on a share price standard. So, I mean, look, that's usually something that gets well received by the market for big growth companies like this. I think the outlook, though, is it's going to be a test, George, because I think analysts pretty much, nailed this. And there's not a whole lot of surprise in the outlook. Data center revenue for the first quarter, by the way, did beat by about $1.5 billion, 22.6. Street was looking for 21.1. So what do you think, George?
Well, obviously, overall positive. I think the reaction is appropriate. And, you have to consider some of these numbers are just spectacular when you just look at them compared to last year. Over $6 a share in earnings. I mean, last year for the same quarter was $1.09. So, these are extremely, phenomenal, rate of change in terms of earnings. And, of course, sales at over $26 billion is over 200% compared to last year. And you're right. If you look at where they're guiding towards now, the variance is narrowing because analysts in the last 2 quarters were really, really underestimating the progress NVIDIA has made. So, I talked about, NVIDIA effectively, and this is what I think is happening, that we're still, we're at the end of the beginning stages of AI, and this is this big monumental shift where there's this huge infrastructure build out, and that's going to take years. And I think we're going to continue to slowly progress forward and faster, not necessarily as fast as in the last year, but forward on a steadier clip. So, if you just take the context of the EPS, just to give you an example, without adjusting for the adjustments which are coming, $25.40 for this year, $32 next year, over $32.15 for next year. We're talking about forward multiples that are in the mid 30s to low 30s in the next 6 quarters. And, relative to the earnings growth, it's cheap. But see, the thing about it is we're not talking about a $25 billion company. We're talking about a nearly $2.5 trillion company. That's where I think everyone is just mesmerized by what's happening with this particular name.
Good point, George. It's not to be ignored, just the massive growth on the year over year, which is, unprecedented for a company of this size. That's where it's so standalone and so unique. I mean, it's not even just in its own world, it's in its own galaxy compared to even the next best. Look, Supermicro is the only one that has anything close to these revenue numbers, the growth numbers in general, the earnings growth numbers too. But then even after that, like Taiwan Semi that's fabricating all this stuff, it's a different business model. And so there you've got less profitability. And then from there, it's like, okay, well, who are the supposed competitors? Advanced Micro, pretty good growth, but not even close because they've got all the trailing legacy stuff that's dragging on them. So if anybody wants to express a play basically on this, it's unquestionably still the way to do it. To me, this is just purely going to be a reflection of how much risk appetite we got. How much did the market have a whisper of a massive beat? Because look, the range is still above. That plus or minus 2% for 28 billion versus the estimate, I mean, that does give you above the full range. But the analysts, I mean, the bar was high here, so it's not a massive, massive beat.
Correct. Oh, absolutely. I mean, I think this, ideally, if you just wipe away the market cap and even the business altogether, and you look at the pure financials, one would say, the stock is relatively cheap considering where it's been and based on the estimates altogether. So, I just think of this as, you think about, the internet age or information age, that was a massive shift in human productivity. And now the knowledge age is effectively what OpenAI and AI and the infrastructure, the core architectural infrastructure that NVIDIA provides is a massive leap in human productivity. And that's huge amounts of value that's being added to the global economy. And so you have to put this in context of trillions of dollars, but think about the billions of people that are going to benefit and the profits that are going to be generated from the value-added productivity from AI. So, that's where Nvidia stands out. And again, very profitable business.
Yeah, 78%
from a hardware business, but
gross profit margin, 78%, full
Yeah.
percentage point above what Street was expecting, 77. I mean, that's fantastic.
And yet, you look at net income in the last 4 quarters, 48%. And I didn't look at this quarter because everything's coming out; it's fresh off the oven here, but out of the oven. But at the end of the day, that's extremely high for a hardware business. And you have to think about also the additional Omniverse software ecosystem that NVIDIA is building out. That's another thing that is still being put forth in terms of their value-added ecosystem. So obviously a good report. But again, the variance in terms of prior estimates versus what they report is going to narrow based upon analysts catching up.
All right, impressive stuff, no question about it. Any other scenario, and it would be okay. Obviously, this is going to be a huge rally in the stock, so it's just a matter of whether or not it can hold it. We've got a trade up to 997 in the aftermarket. So the previous intraday at 974. We've got a breakout, technically on our hands here. So as long as it holds, as long as it doesn't turn into a big red candle, I mean, we should be pretty much off to the races. The other thing, too, is that on the trailing basis, the full revenue came in at 262%. The last quarter was barely above that. So, it was supposed to kind of peak more clearly last quarter and come down, but it actually just kind of plateaued. The growth, they almost met the same annual growth as last quarter, which is crazy.
Yeah, absolutely. I mean, when you look at the rate of change compared to the same quarter last year, we're starting to see it plateau. And that's what I mean by, I think we're at the, at the end of the beginning. And what I mean by that is this element of plateauing in terms of the comps compared to, last year, which has been remarkable. So, you're not going to see these major, 3-digit round number percent changes. Going forward, you're going to see the growth moderate, but it doesn't mean the stock is going to fall. It just means it's not going to increase as fast.
True,
and so that's what you have to expect in this particular underlying name.
Absolutely. Analysts are thinking it's going to drop off to 100% annual growth next quarter. All right, we are up on the deadline to the second. Thank you very much, George Tsilis. Thank you for watching us for NVIDIA earnings. Have a great night.